Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday, June 2nd edition of Benzinga's Premarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Good show for you folks today. We're going to talk about that jobs number coming in hot at 8:30. We have some earnings. Actually, surprisingly, I feel like we always go late, but we got earnings. LULU, Restoration Hardware, VMware, Workday, Five Below. Goose had its first report this morning. We're going to talk about all that. BlackBerry got a nice little comment yesterday from Andrew Left. Is BlackBerry the next NVIDIA? I don't know. We'll have to wait and see. We got some ratings to discuss as well. Our guest at 8:35 today, Joe Saluzzi, partner and co-founder of Themis Trading. He is one of our favorite market structure experts. So I know Dennis and him will have a great little nerdy market structure talk. But in the meantime, Joel, how's it going in the S&Ps?
Guess if they're up or they're down, Spencer.
I'm going to say they're up.
They're up 5 1/4. Extremely strong close. Continued follow through here.
Take two.
Take two?
Hold on. Hold on. Oh, you know what? No, we're good. The stream we're good. We're sorry about that, folks. The stream was private and now it's public, so we are we're good to go. So let's just keep on rolling.
All right, I jinxed it. I did the total jinx this morning because I said, hey, everything's been running good lately. But anyways, S&P futures here are in the green by 5 1/4 points. 34.75, 37 1/4 the high. We'll see what happens on the jobs number. All-time closing high from Thursday, 29.50. So we'll be keeping an eye on that. The downside, pre-market low, 28.75. Now, crude is taking a hit. Worries about oversupply here. Traded into the 46 handle, 46.74, getting a little reprieve there. I see a major low at 46.35 if we get back under there. Gold and silver in the red, but still holding up. Gold in the red by 5 1/2 at 12.6460, and silver down nearly a dime at 17.19. Well, Dennis, the trend hasn't changed in the market, but the trend has changed as far as our lunch bets go.
You got me on the Dollar General one. It did not follow the Dollar Tree lead, and obviously Dollar General kept rallying yesterday, banging the pair traders' heads against the wall here, and I thought it might come in. It did not. Congratulations, Joel. You won. You took me on that one. I gave you the edge, and you took it, and you ran with it.
So unlike you, Dennis.
I gave you too much of an edge. I'm never giving you that much of an edge again. I got cocky with you.
And I took a bullish bet. Notice that. I took a bullish bet.
Yeah, you did, actually. And I took the bearish. That was the problem. You can't take bearish bets. And look, that's why I'm going to lose on the forward bet, too. I just realized you got to always take the bullish bet and you win. Man, you got to look at these, this trend is your friend and everything just goes up. So here I was betting against Dollar General, betting against Ford, and obviously all I needed to do was go with the bullish bet. Joel, you just realized why I always beat you. I always take the bullish bet.
Yes, and so I'll probably be +1 lunch after the Ford bet. You can come over and pay me that anytime you want.
It won't be +1 lunch. I like the way his math works here. Come on. Anyways, so and you went with the math competition in grade 3, and here's your math. I was up at least 3 lunches. I think I was up 4 lunches.
No, you were never up 4. No, the limit is 3. The limit's 3.
And I'm up 2 steak dinners too. When do I get those steak dinners? Ruth's Chris. Talking Ruth's Chris.
When you come over, we'll do it again soon. I'll take you and the wife
out. Okay. So anyway, so now I guess it's officially 2 lunches, and the forward bet is still on the table.
Correct.
What's the parameters for the forward? I think I lose the forward bet today. What's the parameters?
11.67.
It's got to get. Well, when do I win? 11.67 versus what?
10.67.
Wow, that was a bad bet I made there. That doesn't look good at all right now for me. Looks like you're going to be down to 1 lunch. I better come back and collect that. So David B says that we could split a can of Spam, but I guess we should define what lunch is because you never know what Joel might pull off here. But anyways, obviously Ford, great day for it yesterday. Here's a little theme for you for 5 minutes. The dogs are barking again. We talk about this on the show. It seems like every couple months you start to get this market where they start buying the garbage of the market. Not that Ford is a garbage company, but it's been a garbage stock. It's been a garbage stock for a while. I own it in my invest portfolio. I still think there's value there. But short term, it has been a garbage stock. People buying into that yesterday. People buying into BlackBerry yesterday, thanks to Andrew Left. People buying into stocks like Macy's yesterday. People buying into stocks like Macy's this morning. People buying into Kohl's. All the stocks that had been laggards were taking off yesterday. So I call it, combing the market or combing the ditches or looking for garbage, the garbage trade, whatever you want to call it. But the dogs are barking here, at least yesterday.
What about GoPro?
There's a good one. Did it move? It did move up yesterday. What about Fitbit? Fitbit, look at the Fitbit move. It's like there's an algorithm that says, okay, now is the time to buy the garbage. And they have all these stocks on their garbage list. And they buy them all. Fitbit, wow. And that's a key. That was a big Red Dog reversal the day before.
Yeah, made a new low of the move, and now Fitbit maybe going all the way to, $5.50.
$6. I think Fitbit could see $6. Oh, $5.53. Oh, I sense a bet coming here.
No. Lisa likes her Fitbit. She got one for Mother's Day, and
what's she think?
She likes it. I mean, like, she needs it. She's like the fittest person in the world. But, it tracks your sleep, your walking. It's working so far.
Yeah.
I kind of made fun of it.
I liked the sleep tracking when I had it. Like I said, I had one for about a month and a half, then I gave it to my sister-in-law because I kind of already figured out everything about myself. But I was always convinced that I slept like 2 hours a night. But it was all chopped up sleep, but I actually was getting 5.5 to 6 hours. So I was still getting, because I get up and trade, or I get up with a kid, or I just get up, period, because I'm just wired all the time. But anyways, I found out that I actually do sleep 5.5 to 6.5 hours a night. So probably averaging 6, which is much more than the 2 hours I thought I was getting.
Before we get into these earnings, Dennis, look at this IBM chart. Matty G in the house is talking about IBM, and this thing is winding up here. It got hit on the Warren disclosure, went down, consolidated, held 150 here. I mean, there's a couple, like 4 tops in the same area here in IBM. The good thing is if you're trying it here and and it cracks 150, I'm talking for a swing trade, you're out if it takes out the low of the move. But look at that. 1, 2, 3 highs in a row. Just under 153 trading up in the pre-market. Dennis, what do you think about that chart?
It's been a disappointing stock, so it fits the bill of, garbage stocks here, and it's been a garbage stock for 2017, start of the year, obviously, at 180. We know Buffett sold, everybody washed out down to 150. I think if you were trying it long here, I think you're right. I think it goes through 150. I'd want to stop out of it. But just looking at it here, 3.91% dividend. I think it could get a pop. I mean, it's winding up, so really it's range bound here. Love to see it above 155, and then possibly start attacking that gap that I had down in May, which we can call the Warren gap, when he actually disclosed that he sold the stock, even though he sold it back at 180. So it sets up not bad.
Yeah, and I think he only got rid of a quarter of his position, right? Didn't he still keep a pretty good amount of it? We can check the records on that.
Oh yeah, he kept a chunk of it.
Yeah.
So, but you can, that's why we were saying even they were selling it that day. I mean, you're way late to the game when you're following these 13F filings that get disclosed. And it was actually disclosed in CNBC well before that. But Warren said he sold at 180, and you're coming in here, if you owned IBM, you're selling it at 155 because he sold it at 180. I mean, you're so far away from where he was selling. I mean, if that's the whole reason for you buying and selling is following what the big money's doing, you're way behind. And that's the problem with the 13Fs. It's just too difficult because the information is as much as 45 days delayed.
Yeah, but the bots don't know that, so they just trade.
Well, bots don't care. They're short term, and and the traders too. Like, I mean, I'll trade if it's disclosed and Warren sold, I'll sell it just as a short term trade too. But I'm just talking if you're a longer term investor. I don't think that's the way to do longer term investing. Short term trading, it's information you absolutely have to have because those 13Fs move stocks. When it's disclosed, Warren sold, stock's going down.
One more stock before we do the earnings. Steve Straza has been all over this Borg Warner, and here we are knocking on the door. We hit 45.05 yesterday. I don't like that we came back and we pulled back and settled 70 cents off that level. So 45 is going to be the big number going forward. You topped out a few months ago in the 44 handle. 45 held up in late 2015 as well. So looks like you might have a big seller at the point in 45. Big bar closed off the high. We'll see if sellers emerge at 45.
I mean, the automotives are just getting hot here the last few days. So, parts maker, this is, it fits the bill. So start looking at that stuff. I mean, maybe it was the day to look at it yesterday before the big move. But GM had a good day yesterday. Wild bar for GM. Is that candle right for GM yesterday? What the hell happened in GM?
You know what? I watched that thing off the open. It dropped a buck.
It got killed off the open, and then they rallied $1.50. What happened in GM yesterday? I just noticed that just now. They murdered it. On the opening bar, liquidity is very low in that opening minute. We know that, so it looks like the opening bar they murdered it down.
That was auto sales, Dennis.
That was auto sales that came out right then.
Yeah.
Okay, so they hit it and then they bought it hard. Then they look like they hit it again. It looks like almost like a little flash crash there around 10:30, and then they bought it up again.
Yeah,
so.
Maybe that's a bad. I don't know.
Wild.
Yeah, mixed auto sales results. When I was looking at them, they didn't look that good, but maybe they weren't as bad as people thought they were going to be. So we'll see here. The Detroit stocks on a comeback. Mustafin is saying all auto stocks were strong yesterday, and
they were.
Yeah, so we'll see. 2-day move. We'll see if it happens in Ford and GM.
Sometimes. Yeah, and the 2-day move, just to expand on that, is follow through the next day. So it's kind of like when I play the 2-day move, I see what closes strong, and I often take those stocks home because you might have a follow-through move the next day. Johnny come latelys, maybe even a late broker upgrading or following, chasing price. There's lots of reasons to buy stocks that close strong, just for it in the opening trade the next day because you get that follow-through. And usually what I do is I try to unwind that trade in the first 20 or 30 minutes. So when I'm playing the 2-day move, that's how I play it. The 1 day happens, you look at what closed strong, or you look at what's strong on the day, buy it near the close, take it overnight, and then sell into the strength the next day because there's often follow through. And I mean, you'd be making money today if you were doing that in Ford. You'd be making money if you're doing that. And I mean, the market's up here too, but Macy's was trading up here earlier in the pre-market. There's often follow through the next day.
And like you saw, whatchamacallit getting bid up in the after hours, John Deere, right? It hit 127.50 in the pre-market yesterday, and then it went right to that level today as well. You saw it being bid up, and then you saw J.P. Morgan upgrade after that, right?
Yeah, and that would have worked in that case because Deere had a strong day. It didn't close strong, but it was up, and you got giant JP Morgan come in late here to the party, but they're analyzing. They probably like the merger, and they upgrade the stock, so that's giving it a lift here this morning. That being said, there was overhead supply here now, 125.98. I know Deere just hit 127 in the pre-market. Oh, that was at 4 o'clock this morning. That's way overdone for the JP Morgan upgrade. I think it's only to neutral. Plus, I think you're going to have resistance up at that 26 level from yesterday on Deere.
All right, now let's get to some earnings, and we have some good and some bad and some ugly.
There are some great ones here. Let's go to the good first. Lululemon, holy cow, this blasting off like a rocket ship this morning. Stock was a dog, and you know what? This set up really well. I'm kind of kicking myself. Maybe should have bought it ahead of the earnings because, for one, they haven't been selling a lot of the retailers off, on bad earnings, at least the ones that had been weak going into the report. Lululemon, fairly weak, so it fits that description. So when the stock chart looks like this, they don't have to do much for the stock to rally. Squeeze them shorts a little bit. What was the report, Spencer? LU.
Q1 adjusted EPS, excuse me, 32 cents versus 28 cents. Sales of 520 versus 513 or 514 about $1 million. So they beat on the sales, they beat on the EPS for Q1. They did also raise their outlook for the fiscal year, and they see Q2 guidance coming in a little EPS a little bit lower. Sales guidance for Q2 is in line or actually higher than the estimate. And comps down for Q1 1%.
All that definitely good enough here for Lululemon as they had it in the doghouse. The thing got hit back in March. I believe that was sale. That wasn't earnings back in March. I think that was just comparable sales that really knocked it down. When it went from 65 down to like $50. It was a crazy move. Coming back here, Joel, thoughts, concerns, up 16% here. I mean, you're coming here now buying Lululemon. I feel like you're late to the party.
Very interesting setup here. We are trading up at the $56 area and holding. So that's interesting. 56.75. I want to see if it can really hold 56, the highest level that it's been at since it had, I don't know, whatever, the sales that knocked it down was down in the 55 handle at 55.64. So important for that to hold to keep the move going. I just noticing on the daily here, it did have a red dog reversal yesterday. So if you were picking it up off that, congratulations. I don't know. I wouldn't short it, but if I was long, I'd be looking for any bid in sight.
Yeah, hard to say. You do have a couple highs. You're getting into a gap area there, but it starts falling back below the 55 area. I'd be concerned that this could be a retailer that could give some of the gains back. So I'm hands off on this one. It's kind of in the middle of nowhere for me at 56.31. Chat buzzing about Restoration Hardware, Joel.
Man.
Me and you have hated this company forever. We've obviously had it wrong in the last quarter because the company has went from, in February, stock was a $25 stock. $57. I have no idea why Restoration had been so strong, considering how weak retailers had been, considering that everything looks like, it's an old antique in there and they're charging $1 million for it. I don't get the store whatsoever. Me and you have always given Restoration Hardware not a lot of love on this show. That being said, it had a huge run up into earnings. So exact opposite story of the Lululemon. When they have huge run-ups like that, everybody's expectations are very high. They need to blow it away. And it sounds like RH did not blow it away.
Spencer, you got the numbers there? The guidance is what?
Yeah. So Q1 for Restoration Hardware actually not bad. 5-cent gain is in line with the estimate. Sales of $562 versus $558 million, and the comps were up 9%, but it's all about that guidance, and they cut it for the whole year. For the whole fiscal year, they cut everything, and that's the story.
Okay.
So cutting your guidance when your stock chart has basically doubled in the last 3 months, that is a recipe for a disaster, and that's exactly what we're getting here this morning in RH with the stock trading down a cool 20%. Ace was saying, I believe it was Ace was saying, yeah, it went down as low as $43.12. So it is off those lows, but this is still a hell of a mess.
Yeah, and this one, I'm really kicking myself here. I actually emailed Ryan Craver about a week ago because I was looking at, and I just said, why is this stock up here? I know. Technically, we talked about it, and he said, I don't know either. And that was his response. So yesterday, walking the dog with Lisa, and I get an email from Ryan Craver. I hope you shorted it. And I'm like, oh, man, I totally forgot about it. And now here it is. I mean, obviously shorting it today in the hole could be a tough trade. Maybe I'll wait for some kind of rebound. It's going to take a lot to get a gap fill, but we'll keep an eye on that pre-market low. 43.12, kind of a nice uptrend. Stalling here a little bit at 46. So 43.12 and 46 are my early numbers here in Restoration Hardware. But, man, I should have never taken that thing off my screen. Should have never taken it off my screen.
This now totally in the middle of nowhere, and long term, me and you, I'm not an investor in RH. I don't think I'll ever be an investor in RH because I just, it's exact opposite to the way I like discount stuff. I'm, kind of cheap. You go in that store and everything is really
they got
expensive.
cheap stuff at expensive prices.
That's kind of their business model, isn't it? But you know what? It worked for Starbucks, right? They got cheap coffee, and the whole Starbucks business model, not completely different, but just quite. Talking. They took the $1 cup of coffee and said, "Hey, we'll spruce it up a little bit and charge $5 for it." And you think about that business model, you think that's an epic fail. It was an epic success. So maybe Restoration Hardware onto something. I don't know.
Yeah, not quite the same thing, but I get your point.
I don't like my analogy.
No.
It's National Donut Day, too, so if you're near your Tim Hortons today, it's National Donut Day.
Oh, wow. Krispy Kreme. I like those donuts there. All right, I have to go ahead and get a donut now. Thanks. Let's move on. Another stock reporting earnings was VMware last night. They hit the stock really hard, and then it bounced back. Full disclosure, I've got the VMware DVMT pair on. So, and you say, why are you doing that? Well, Dell Technologies DVMT is a tracking stock for VMware. So I am long right now VMware. I'm short DVMT and equivalent amounts.
And how's it working out?
good. I made a little bit of money on it last night, trading it after hours, and I'm actually still trial. There's no market in DVMT, so I can't do anything with it this morning yet. Hoping to get out of it at the open to make a little bit of money.
Yeah, wow, down to 91.01, and now a nice bounce out to 96. I mean, this thing just had such a run into the report, right? Then they got the upgrade yesterday. I don't know what that guy was thinking after like a 40-point rally, but if you can get back up to those highs from yesterday, right at 98, then you'd have definitely another breakout to the upside. But right now, let's see, VMW. What's
just
low?
Hanging out?
Yeah, just consolidating here. I don't know. I mean, needs to hold 96. That's where we're trading right now. So that was your 3-day low right there, just under that at 95.75. So 96 is a swing number there. John Dotson, I saw this stock yesterday. Did you see what ADI did? Blowout earnings. The stock went to $90.
Over 90. Yeah.
And then do you see that now? Did you?
It's giving it all back. It's saying there's a deal with Apple or something, Apple Impact. I haven't been following that story. So, Spencer, do you have the news on what this ADI got hit on yesterday? Something to do with Apple?
I actually don't.
I completely.
Yeah, no, I actually don't have that news. I don't know what that is either.
John, you have to enlighten us here.
I mean,
we're not following the ADI story, so
I saw there was a big.
We try to cover we try to cover as much as we can. We can't follow every stock all the time, so I don't know the ADI story.
Yeah, I saw there was a big price target change, or relatively big, yesterday from Argus, but I didn't see this Apple news.
John, I'll be keeping an eye on that $82 area. You had 3 lows before the earnings report between 167 and 194. You hit 190 yesterday, trading right here at $82. So, you're getting an instant replay of it before earnings here. So, holds 82. You got a chance to recover. That was a big down move. Below 82, it looks like a slippery slope. You won't be getting any good earnings news to get it a boost. So, really, 82, that's a big level here in ADI.
Jumping back to the earnings parade here, a few other ones to talk about. Five Below had a wild ride here after hours. It really got bid up. That what is it? Those fidget spinners they sell there for $5. Have you seen this fidget spinner craze? Spencer probably
has one. He does.
He probably has one on the desk right now.
He does. He has it in his hand.
Yeah, but it's not like I bought it. I got it at the FinTech Awards.
One right now as we're doing the radio show.
Yes, but
you're spending one right now.
Yes, but I didn't buy it. I got it at the FinTech.
All this stuff.
I got it at the FinTech Awards.
Right? So, okay. You know what? I know.
What is the whole? Tell us, Spencer, why this fidget spinner thing is so exciting?
Do you ever? Well, you probably don't because your hands are busy trading. But if you're ever sitting somewhere and you need to listen, you need to pay attention, but you don't. You need to focus and you don't want to zone out. It's just something to do with your hands while you listen. It's just something to do with your hands. That's all it is.
I know one other person that has that, and it's my 12-year-old nephew.
Everyone here has one.
Everyone here has one? I'm not paying attention.
No.
But you know what? And this is
you got to get a fidget spinner so you start paying attention, Joel.
Maybe that's maybe. Well, hey, that kind of little segue here. We're working on some things here in the next week or so, where you will actually be able to see Spencer spinning his what is it called?
Fidget spinner.
Fidget spinner.
Yeah, so you know why it's called that? Because for the people who fidget, this gives them a thing to occupy themselves so they don't fidget anymore while they spin.
Fidget. You know what I do? I jiggle my leg. I'm a leg jiggler.
Right.
That's my feel. I don't actually have to go out and buy a $5 thing to spin around. I just jiggle my leg a little bit. And I feel like I lose weight doing that too.
Okay.
Jimmy A's son has 5 of them, but
5? How does he spin, Jimmy A? How's your son spin 5? Does he do them all at the same time? This guy, that could be impressive.
No,
that could be like a YouTube video that get 1 million hits.
This is going to be
kids spinning 5 fidget spinners at the same time.
This is going to be a circus act. This is going to be a thing that they put in like the time capsules for like 2017. Like remember when? This is going to be in the time capsule. The fidget spinner.
Fidget spinner. You think this is a fad?
Yeah, of course it will. Of course it is. It's not?
That was a sense of sarcasm in my voice. So, okay. Getting back to the 5 Below, because they sell these fidget spinners, right, for $5. How much did you... Oh, you got your fidget spinner for free because you got it from the FinTech Awards. Is that the typical price for a fidget spinner is $5?
I have no idea.
I don't know. I've never...
All I know is a Five Below had a good quarter. That's all.
Because every kid was going out there at the Five Below store for buying their five. When Jimmy A's kid was buying 5 of them at Five Below, so a really good quarter there. So Five Below ran up into the report. Had a good number. Give us the numbers here. And did they just thank the fidget spinner for
We
the
really got the chat buzzing here with
They like fidget spinners on the chat.
Yeah, Tony 2000's daughter wants one for her birthday. I'd do that all day long, a $5 birthday gift.
Well, no.
Oh yeah, you're all over that, Joel.
Because you can buy like fancy ones too that are like expensive. I saw one that was like $1,000. It was like a jewelry one, but whatever.
Tiffany's is probably coming out with them, the real fancy ones.
Yes.
For the real rich kids.
As far as Five Below's earnings go, 15 cents versus 14 cents. Sales of 233 versus $230 million, so they had a pretty good number there. As far as Q2 guidance goes, EPS is higher than the estimate. Sales is higher as well. Fiscal year EPS is in line. Fiscal year sales are higher, or in line, excuse me, and Q1 comps up 2.6%.
I don't see the permabull in this stock. Larry Glickman has been all over this stock for quite some time. Got an initial spike off the headline number to a new all-time high at 55.92, though. We've pulled back. Still trading in the 53 handle. I see a pair of highs here at 52.70 and 52.88. So 53 holds 53. We get a chance to challenge that all-time high. May find a few sellers at 54.13 along the way. And as I mentioned, all-time high was way back in 2013, and that was at 55.28.
We have to find out how much their earnings are because of fidget spinners. Because this could be your fidget spinner trade when the fad ends, then I'd sure Five Below at that time.
Well,
what do you think of that setup?
You can buy them lots of places, I thought. Not just Five Below.
I know. Well, obviously you can buy them lots of places, but can you get them for $5 everywhere?
I don't know.
J-Dot's getting rid of his hacky sack for a fidget spinner. It's something I was.
Does anybody do hacky sack anymore?
Yep, Brentster does.
Yeah.
Do you do it right in the office, Brentster?
Yeah. Well, he's not mic'd up right now, but Brent has hacky sack. Sure.
Wow. So hacky sack is still a thing.
He's nodding his head. Too. He's nodding his head. He's got
it's
two.
Not a thing anymore. It's just Brentster. He's stuck in the past.
Yeah, Brent also wants to let us know that it's 2 minutes to the jobs report. Thanks, Brent.
All right, 2 minutes to the jobs report. So
We're
Brent
talking
doesn't have
stocks?
time to come on, do some hacky sack and fidget spinning at the same time.
When we get to webcams, one day
we're
we'll
gonna go
have
video
Brent
here, guys.
on. Yeah, we'll have the video. We will have Brent doing hacky sack live.
And fidget spinning at the same time.
All right, Dennis, you want to sneak in one
yeah.
more report, or do you want to look at IBB? Someone asked about that in the chat.
Okay, well, let's check out the IBB. We were waiting for the jobs. IBB. Nice day yesterday. Well, I guess it fits the description. The IBB had been going nowhere, so why not start buying? Pharmaceutical stocks had a good couple days here, too. More dogs barking here, and the IBB, I would say, has been a dog. It has not performed well for the last few months again. Really, when you look at the IBB for the last few years, it's gone nowhere here, so not surprising that it starts catching a bid when the other dogs start barking.
Yeah, I mean, that's a big 2-day move here. I mean, this number been sticking in my head, 300 for quite some time. And, if you want to buy it on strength, you would have got caught a few times doing that. But ahead of the 300, let's see what happens at 295. I see a high just shy of that, and then one just above it going back a couple weeks. But, Dennis, 829, we'll let you go here. You'll be back.
Normally I go trade the number, but the last 6 times the market hasn't even moved on it. So is it worth me going? Is there going to be movement give me 5 seconds. Is there going to be movement?
No.
Okay, well, then I might as well just stay on the show. I'm going to go. Okay, I'll go for a minute. I'll probably be back in a minute because it's probably going to be no action. So, okay, go cover the number.
All right, so we're about 30 seconds away. We're looking at an increase, as far as estimates for non-farm payrolls, looking at an increase of 185,000 jobs. Private payrolls, we're looking at 173,000 jobs. And unemployment, looking at, what's the unemployment estimate here? 4.4%, is that what I'm seeing? I'm looking through an article, so forgive me if that is incorrect. But we're looking at 185 again for non-farm, 173 for private. Let's see what that number ends up coming out to. Just about a few seconds away now, Joel. Anything?
S&P just took a little dip here.
It's a miss.
It's a miss?
It's a miss. Let me wait 4 seconds for there we go. U.S. non-farm payrolls for May, 138,000 jobs. Like I said, 185 was the estimate. 211 was the prior reading. Private payrolls 147. Again, the estimate there was 173, and the prior was 194. A big miss there. Unemployment rate for May is down 4.3% versus a 4.4% estimate. 4.4% was also the prior reading. So good unemployment, but a lower number for both non-farm and private payrolls.
All right, we took a little dip here in the S&Ps to 3150, back up at the 2433 area. We kind of been hinting around talking about, maybe the Fed's done here. Maybe the economy is not as strong. Is not as many jobs being created, and interest rate hikes, especially if you look at some of these utility stocks and these dividend-paying stocks, been rallying as of late. So, maybe the economy is not as strong as they think, and they're not going to raise rates another 2 times. That's my quick analysis here of the jobs number. Did go down to 3150. Did not make a new low from the pre-market session. I'm keeping an eye on that all-time closing high from yesterday, 2950. Pre-market low, 2875. I see no continued downside until that's breached. If it is, look out. We'll see what happens. 37 and a quarter. That pre-market high wasn't even sniffed, so we'll keep an eye on that as a level as well. And let's see, we came right to mid-range on the day too, so that could be a good number. Let me pull up my other platform and see what mid-range on the day is. Mid-range on the day is 2433, so a little bit of weakness here off the jobs number. No, Dennis, if he's coming back here.
I'm back. I'm back. There's a big 2-point sell-off, though.
Yeah? Did you just have bids out there just catching absolutely?
Just get everything on that 2 points off. We're still down almost 3 points now, so we're still leaking here on this jobs number. What got hit on this? Financials. Banks got hit on it. Citigroup trading down now 43 cents. Bank America is now trading down 0.5%. All these stocks got hit on it. JP Morgan got hit on it. And the TLT blasted off into orbit. So obviously, they're looking at this saying, hey, maybe interest rates aren't going up in the near future. And you can see financials getting hit. Defensive stocks, Philip Morris catching a little bit of a bid here this morning. Now looking, at the utilities. Some of the utility stocks starting to get bid up a little bit. But the TLT blasted off, and the stocks and the financials got hit a little bit.
We kind of been talking about that, Dennis. That the rates may be done for the year, and I think Brad in the chat put in a statistic. It looks like less than a 95% or 5% chance of rates going up here. So reason for weakness in the financials, we're finding out now. The TLT mirrors your bond trading. That just hit 125, 125.01 to last print here, but still green on the session. So we will see what happens. 8:33. We were asked. Let's sneak in 2 earnings reports here. We'll go a minute each. We'll go with AVGO. You got the numbers on that, Spencer?
I do have the numbers on that. Q2 EPS from continuing operations, $3.69 versus a $3.50 estimate. Sales of $4.2 versus $4.11 billion, so good numbers there. They see Q3 adjusted sales at about $4.5 billion, 4.45 plus or minus $75 million. 4.26 was the estimate, so they're coming in with a higher than expected Q3 adjusted sales guidance.
48.5. That's your high that you made off the number. That blows away the former all-time high. Former all-time high was from yesterday. 242.89. I don't know. This one, the big sell-off yesterday makes me think, wow, we're right back up here. I don't know. After seeing that move down to 234.55 yesterday, I wouldn't be surprised to see if sellers emerge ahead of that pre-market high. Dennis, any thoughts on AVGO?
I mean, they were leaning the wrong way yesterday. Now you see the big blast off here, making new highs. It hasn't really, some stock. It's been tough. It's been a tough market to play earnings afterwards because in some cases we get the gap and go, and in other cases like the ADI, we fill the gap. So I don't know. In this case here, they were selling it yesterday ahead. Now they're getting the big pop up. I'm not chasing it up 12 points. And I've never made money chasing stocks. And I'll tell you, in this environment, it hasn't really paid to really chase stocks. Waiting your time and waiting, for the pullback, maybe to your level, seems to be a better strategy than to buy a stock that's trading up 12 points on an earnings report.
All right. Do we want to call Joe right now and save the goose for afterwards?
Let's call Joe, but let's take a break. I don't want to put unless you want to put him on the
Yeah,
spot. All right.
let's talk to.
All right. All right.
We'll call him live. We're
Well,
calling Joe Saluzzi.
Yes, we are.
Themis Trading. He's the co-founder. He is a market structure expert.
Trading Victor.
Victor, how you doing this morning? You're live on Benzinga's Premarket Prep.
How are you today, guys?
Good. It's, there's always when I worked on the trading desk and the trading floor, there were always like good jokes. Do you have any new good clean jokes that you could share with our listeners?
Not really. No, trading desks usually have dirty jokes, so I think I'll pass on this one.
Okay. All right. Is Joe around?
Yes, hold on. I'll get him for you.
Okay.
Nice speaking to you guys. Have a great weekend.
All right. Thanks, Victor. Bringing on Joe Saluzzi, partner and co-founder of Themis Trading. Long-time market.
Morning, guys.
Good morning, Joe. How you doing today?
I'm doing great. How you guys doing?
All right. So Joe Saluzzi's on. So Dennis, take it away.
Oh, you just throw it to me here. Joe, what's going on? How are you this morning?
Dennis, man, it's been a little while. Good. How you doing?
It's been a while there. I see you tweeting, though. I always follow Joe. He's always got some good stuff he's tweeting out there. So what's new? Let's talk, first before we jump into all the market structure talk here. Talk these markets. How are you feeling here as, you see this S&P just continue to climb the wall of worry? Seems like there's lots of stuff to worry about, but are your customers, are they worried about the markets, or are they just buying every pullback like everybody else?
I think they have a strategy and they're sticking to it, and I don't think they're worried necessarily. They professional money managers are paid to be in the market, and they have strategies. And a lot of our guys are sector based, so they have different. Not the general market fields. They're not generalists, in other words. But in general, for me, I'm not necessarily worried in the sense that we've seen these types of markets before. We've seen them many times where they just tend to go up, and up, and it's got that feel. I think it's more of a hope type based market like we had in the past as well. That we're waiting for things to come out like tax cuts, infrastructure spending, and bigger deals. And I think the market's kind of given DC a pass at this point, saying, okay, we'll wait it out. Let's see. We think there's some good stuff coming down the pipe, and we need to price that in right now. And that's what you're starting to see in the market mechanism.
Let's talk about good stuff coming up the pipe there in the market structure world. Joe, what are you seeing?
A lot of stuff, as always. There's always something new in the market structure world. I think lately, interesting. Access fees has been a big talk, rebates and so on. And just the other day, BATS came out with one of their exchanges, and they decided to say we're going to go to a flat fee. In other words, it's going to be the same fee, make or take, 3 mils per side. I think it's 3 mils over there. And it's going to say if you add liquidity, you're going to pay 3 mils, and if you take liquidity, you're going to pay 3 mils. And that's actually the IEX model, and that's a model that we've been supporting for a long time, where we think there shouldn't be any rebates, and there should be a flat fee, and that way the exchange gets paid for the service of matching a buyer and seller, and you take out the conflict of interest from a broker-dealer router, from a broker router through an algorithm. It makes sense to us. The only problem with that for BATS is that they own 4 exchanges, and they only did it for 1. So right. You still have multiple pricing models. There's 12 current exchanges, 13 if you count the NSX, and they all have different pricing models. So those pricing models create conflicts of interest along the way with the algorithms. We think you need to standardize that. It was a good step, I think, by BATS at least initially to get the conversation going. But now, it's really going to take a little bit more from the other guys to kind of keep that going forward. And right now the talk is, they're going to have an access fee pilot, and we'll see. It's kind of gotten stuck with the new SEC chairman coming in, and everything's kind of slowed down at that point.
What do you think about an access fee pilot? Is that something they should take on? I mean, the small, the tick size pilot, I don't think has really gone that well, and I'll ask you about that in a second, but, do you think they should be doing another pilot here on access fees maybe?
Well, it could the problem is you got to overcomplicate things. We've got tick pilot's got 3 buckets. If you put an access fee pilot with 3 buckets of stocks, it's just going to overcomplicate it. I think you can do it with a small subsection of stocks, and you can say, but don't come up with 15 different methods of analyzing it. A flat take fee across the board, across every exchange being the same. In other words, let's just say 10 mils, which is 1/10 of a penny. Everyone gets to charge 10 mils whether you take or make, and let's see what happens. Let's see how the conflicts of anything changes. That's something I'd be interested in looking at. I think that's the best model. But I think to kind of say, okay, we're going to have this bucket that has 10 free, an access fee of 5, and another one with 10 and 20. It's just going to confuse things a little bit. But they are going to do something. I definitely feel that something is going to happen there. It is a hot topic at the SEC at this point. Once the new commissioner and the new chair kind of get situated, but there are other things also, of course, that are on their plate. So we'll see.
I mean, the biggest issue that I have with the access fees, and I haven't really been public saying, to get rid of them. But the one issue is that brokers themselves don't have much incentive to route their limit orders onto the book. They're going to take, anything that's, or taking liquidity, their market orders, sorry, they're going to route those to off exchange because then they don't have to pay those take fees. And what that does, as a whole, is it keeps taking more orders and moving it off exchange. And I mean, our equity markets have, slowly been drifting to the dark for a long time. And, when you've got these, fees that, just, for an example, let's just say you have retail broker XYZ. Well, if they send a market order for 1,000 shares to ARCA, that's going to cost them $3, if they take it because of the 30 mils. But, if they take that off exchange, to an off exchange market maker might actually pay them $1 or $2 for that order. And, then, so it's a $5 swing. So it's just economics at that point. So I agree with you. I think access fees throws that whole matrix out, and what it does at the end of it is starts to take orders off exchange.
Well, it distorts supply and demand when you think about it, and it distorts price discovery. Think about the person who posted the limit order, say the stock is 10 cents, 15 cents, and post a limit order at 13 cents for 1,000 shares. And then all of a sudden, a buyer comes along and says, yeah, I'd buy that 1,000 shares at 13 cents. But rather than going to that limit order, like you just said, it goes to an internalizer, and the internalizer fills it at $12.99999, right?
Yeah.
And meanwhile, the guy setting the price gets nothing. And he's like, wait a second,
Yep.
I was the guy who set the price. I tightened the spread, and I'm getting nothing. So absolutely, that I still think all payment for order flow in all forms should be. We disagree with all of it. In other words, you're mentioning the payment for order flow from the internalizing market maker. I was talking earlier about the rebates that the exchanges are given. Both are equally. We don't think have a place in the market, and you don't need them.
I mean, if you got rid of it all, that would be a cool pilot, to get rid of all types, like you said, of payment for order flow, because, I get why, a little bit of the inverted exchange stuff is because, okay, well, you have, this customer sitting, and trying to get filled on their limit order. Well, they know if they throw it on a stock with an inverted exchange, they're going to get filled a little bit quicker. So it's kind of, like for the professional trader to throw out there, they can offer, on or on YBAT, or it was Edge A before, they could do it on, and they're going to get filled a little bit quicker. So I kind of get that. Even as a prop trader myself, I sometimes use that. If the queue is really long, I know if I throw it out there on NQBX, I'm probably going to get filled a little quicker than if I throw out my limit order on ARCA. So I kind of like it for that reason. But I would love to get rid of all the payment for order flow altogether. Get rid of all the and so try that would be an awesome. Forget about the tick size. Even the the tick size pilot. We can talk about that too. But really the meat and potatoes is where you're talking. Get rid of all this payment for order flow in all forms altogether, just in a pilot, and see what happens, and see if liquidity comes into those stocks.
I totally agree, and that would be a real pilot, right? Clean out the whole thing and let's see what it looks like, as opposed to having, we'll get rid of a little bit, but we'll leave this. That's not going to clean it out. So and that's a good point that you mentioned, because there are different types of payment for order flow. So if they do just do an access fee, it is not going to handle the internalizing payments for order flow that are going from that side, from the retail side. So good point, and that's something that hopefully the SEC is also. Maybe I'll bring that up next time I talk to them.
Trade through rule, Joe. I keep I got Joel in the background here, and Joel's talking. You got this way, Joel's here, Joe. So usually I'm pretty good like that. So anyways, trade through rule. Talk about what they've been saying about this. Some people are talking about getting rid of it. Quickly, maybe just in 1 minute, explain the trade through rule, and then give us your thoughts.
Sure. It's known as Rule 611 in the industry. It was part of Reg NMS back in 2007, and it basically said that any exchange or any market venue that is displaying an order cannot be traded through. So even though you may be a small exchange, representing 1% of the flow, if you've got a bid that's better than the next, say the market is currently 10 cents and you bid 11 cents, you cannot be traded through until your order is satisfied, if it's lit as opposed to dark or hidden. So it basically said it put everybody on a level playing field. It did cause problems throughout when it comes to routing and things like that, and there were issues along the way. But for 10 years, that rule has been in place, and nobody seemed to have a problem with it. The HFT community, nobody over there had a problem with it. We've kind of thought that they probably used it to their benefit. But now all of a sudden the talk starts rumbling around, mostly from the HFT community and their friends and their lobbyists over there, that, hey, we got to get rid of Rule 611. It's actually bad and it's hurting the market. I'm like, well, where did this come from? Now all of a sudden as volatility is lowering and they're complaining they can't make any money, they want to get rid of a rule like Rule 611. So it made us wonder, like, where's their angle? First of all, who's it going to hurt? Well, it's going to hurt a retail investor who, like we talked about before, post a new bid or offer. They may not get filled. So what 611 would say was that, say it's an 11-cent bid, but you want to trade at 9 cents. Well, if you get rid of Rule 611, you can trade at 9 cents all you want and not have to honor the 11-cent bid, which kind of makes no sense when you're talking about a price-time priority book. So I understand that there are some issues amongst the institutional community, and this is, a good concern that some of these smaller venues act as what we call ping destinations, or where they kind of throw out a little chum in the water to see if they can catch something bigger along the way. So institutions are very concerned that when they have to put up a block of stock, they have to put what they call an intermarket sweep order through, or the broker does, which clears out all of these smaller bids and offers. Well, sometimes when you're doing that, it also sends out a signal, and if you're not routing properly, that signal may cause a bid or offer that's beneath it to disappear. In other words, phantom liquidity, we used to call it, or basically they're getting the heck out of the way. So some institutions were concerned that they couldn't get their fill all the way through. One way to solve that could be to provide a block exception. So in other words, if it's a block trade, and depending on the level of stock, let's just say it's GE, maybe you define that as 100,000 shares, and if it's a smaller cap, maybe you say 5,000 or 10,000 shares. If you do have a legitimate block that you want to cross, well, then you get a block trading exemption, but you still, in that situation, you would trade through the best bidder offer, but it would be a very limited situation. It would satisfy those institutional concerns, but it would still maintain retail priority in most other situations. That would be an alternative to it. Another alternative would be to say, okay, you know what? All of these smaller exchanges, which are really these ping destinations, let's say their quotes, in order to be protected, you need to have a minimum market share in order to protect that quote. That way, if a small exchange is looking to just fish around, you wouldn't have to trade with that one. You go to the next one. And then you as a retail customer could say, you know what? Those guys aren't protected. I'm not going to send my order there. I'll send it over to a protected venue. This is not something new, by the way. They're doing it already in Canada, and they have a 2.5% minimum market share to have a protected venue. That's another possibility. But I'm just discussing alternatives to getting rid of 611. You don't need to get rid of a rule that's there to protect retail investors.
Yeah.
You need to, you can fix things, to help the institutions with those blocks and other concerns, but you don't need to get rid of that rule.
I agree. I think block exception would be a better way to go here, just because even like you were talking about the limit order, the passive side. But think about the guy that's sending a market order, and if the broker is not routing efficiently, there might be a 78 offer here, and they might get like 82 or 85 because they weren't routing it efficiently. There, you're really depending on that broker to make sure that they're routing out efficiently. And if the rule's not there, I mean, there's no incentive for them to have to go and try to get that best price.
Right, and now the other side will kick back and say, well, that's the broker's best execution responsibility.
Right.
And they have to make sure, and that's true, but let's be honest. Are some brokers going to still not do that? Yeah, you're absolutely right, until they get caught. And we know people can't be trusted in this world, right? And we've seen, how many times have you seen SEC fines coming out there for things that they've seen? How many times they don't see things? But sure, we have best execution responsibility, but do I trust that everybody would honor that? No, absolutely not.
Let's jump over to the speed bump talk here. We know IEX has their speed bump. They were the initiators. Now you got the other exchanges talking about speed bumps here. What are your thoughts on the speed bumps and, other exchanges following suit?
Yeah, I mean, it is interesting how they all complained. And if you go back and look at IEX, there was over 100 comment letters written against them, and most of them were either by brokers or exchanges who were complaining that a speed bump would distort the market. Now here they are. The NYSE just created their own actually and just got approved. Chicago's trying to put one out. The NASDAQ has some sort of order which was kind of act like a speed bump. Interesting how they all complained and now they're all joining, but that's a different story. But NYSE came out with one and they base theirs. It's a software bump. It's 350 microseconds. There was nothing in the proposal that I thought could be debated, and so I expected the SEC to approve it, and they did. But what's interesting about NYSE is that they never once said why do they need a speed bump. What is it that it's going to help? Why are they putting that in there? Because if they did, they may have actually indicted themselves on their own speed delivery system. Because think about all their other exchanges that are based on co-location, data feeds, special ports, and so on. It's built on speed. So if NYSE comes out and says, oh, we're going to slow one down because we think speed is bad, well, what about your other exchanges? So they never really answered that question, and IEX kind of put their feet to the fire on that one by writing a letter in on that. They never did. They never kind of said why. The reason why we think they put it in is because they're trying to make believe they're IEX, but they're not, because IEX is more than a speed bump, right? IEX is data feeds not being leaked out like the other exchanges. IEX doesn't have a data feed like the other exchanges. They only have aggregated orders, not individual. IEX has a flat pricing model, right? IEX doesn't have co-location. It's an entire system. IEX is institutional friendly, where the NYSE Amex has a speed bump, and that's it. So don't compare one to the other. They're not. They're totally different still. Even though a speed bump is coming in, it doesn't make it a institutional friendly environment. So I kind of, half laughed at that one, and I wouldn't be surprised if NASDAQ, which they're trying to come out with this ELO order, which we think is also kind of filled with conflicts and all sorts of data leakage. They're going to keep trying. It doesn't shock me, but there is one IEX right now, and there's only one IEX, and that's the one that is where you're going to get your better fills. It's not the other exchanges, and we're big supporters of IEX, and I can tell you that our business continues to ramp up. We continue to find more liquidity there and better liquidity, and we're going to continue using it as long as we can.
All right, Joe Saluzzi, partner and co-founder of Themis Trading. Joe, thanks a lot. Have a good weekend.
Thanks, guys. Enjoy the weekend. Thank you.
Thanks, Joe.
All right, see ya.
S&P futures, Dennis, we did go a little bit red here. Went down and made a new pre-market low, but only by a tick here, 24.2850. So still holding green on the session, just by a few ticks. So we hit that number, and we'll keep an eye on that. Rough sledding if we really get going under that pre-market low. Dennis, what are you seeing there?
The financials, they're really getting hit here. Since the jobs number here, the financials have been straight down. JP Morgan is now trading down over 1% here. Citigroup trading down 1%. Bank of America trading down 1.5%. Morgan Stanley down 1%. Goldman Sachs down 1%, 2 points there. Wells Fargo. So it's your financials that are really taking a hit here this morning. Obviously, they think interest rates are not going up anytime soon. TLT blasting off into orbit. We're up almost 1% here. Obviously, I expect that to roll over into some of your utilities. Some of your yield plays will probably be in favor. We know this market, money doesn't seem to just rotate out of stocks. It rotates around into other stocks, and there's just a lot of issues here, that it can rotate into. So I would be playing this more as, looking at those utilities, looking at those defensive stocks, the ones with the yield. Those are the ones that'll get some love after that jobs number.
And it's funny how these financials had been weak ahead of the report, really since J.P. Morgan topped out in February and March. And got a big number for you folks, though. If you're a key of double bottoms here, keep an eye on 81.65. That 64 and 65, that's an exact double bottom here for J.P. Morgan from Wednesday and Thursday. So that is a number it absolutely needs to hold. Trading down 96 cents at 82.10 at the moment.
Gold got a rally here too.
Yeah.
Which it's typical. It moves around. I mean, there's definitely a correlation with TLT and gold as well. So you often see when the interest rates, obviously you get the TLT catching a rally, the bonds catching a rally. You often see gold following suit with that too. So I mean, if interest rates aren't going up anytime soon, it's not a bad thing for gold.
Right, and I was looking at that chart and I was thinking weakness through 1260 basis a front month contract, but that held up 4 sessions in a row. Now knocking on the door of 1280. Earnings on your favorite company, Dennis, Canada Goose.
Canada Goose. What do we got, Spencer? Talk to me about the Goose, GOOS.
Well, it's their first earnings report since their IPO. Q4 EPS of 15 Canadian dollars. That was a loss. The estimate, though, was a $20 loss. This is, again, Canadian dollars. So they beat that estimate. Sales of 51 million Canadian dollars as well. They expect 3-year growth of mid to high teens percent per year. So that's good.
Where do they sell their stuff? Because I've never seen any. I obviously, I'm a Canadian, but I've never, seen any of this Canada Goose, stuff around. Do we know, are they just selling it online? Or are they selling in stores? Where do they sell their stuff? Goose.
I don't know, like Neiman Marcus and those.
Is that where it is? Have you seen some of this stuff in the States for sale?
Yeah, but I can't think of where. Oh, like Nordstrom. Like Nordstrom is a place you'd buy
Nordstrom sells the stuff?
Yeah.
They're very expensive, right? Aren't they very expensive winter coats and very warm? I think they are. Too bad Marseille's not here, but yeah, I think. Yeah, I'm looking at it here. Wow, I can't believe Dana bought this coat. It's the Canadian Goose Britannia 690.
Is it made with real Canadian goose?
Yeah, not environmentally nice. You could get that. You could get that at Barney's or Moose Jaw here.
You know what?
$600
So
coats.
the one thing I'll say, it's the national bird, the Canada goose. Just to go on a tangent, but they're everywhere. The Canada geese. There are like at my cottage. I'll look out on my lawn sometimes, and there'll be like 50 because I'm on the water. There'll be like 50 Canada geese on my lawn, and they poop. And my neighbor hates them. He's an older guy. He's 82 years old, and he's got a paintball gun. And he doesn't shoot it, but he shoots like near them to try to scare them away. But he's at a battle constantly with all the geese on his lawn. And I kind of get it because his lawn gets ruined because they're pooping all over. Like there's literally hundreds and hundreds of poops at the end of the day because there's so many Canada geese. So the geese are everywhere there. So I don't even know if it would be a bad thing if it was made with real Canada geese. Now we're going to get PETA calling us on that.
Yeah, exactly.
Not a Canada goose lover here. I like watching, they're all good, but they are everywhere in Canada, man.
2132 is where we blasted off to. That is your high. That is holding in there right now. That takes out the former all-time high. This has not been a bad trade off the IPO. Yesterday, was it yesterday? You had that spike up to 1943. That was a former all-time high. So I look for a pullback there. That's still $1.25 away, but that on the downside, 1943, and then if you want another target on the upside, see if you could even get to 2132. That's your pre-market high.
Jimmy A saying on the golf courses too in Canada, they are everywhere there too. You'll hit your ball, and the ball lands near the geese, and if they've got their babies there, they will protect that area. And you're trying to just go near to hit your ball, obviously, and you got to play it as it lies. And there's like geese attacking you here, and they're vicious, man. They're not scared either. So even yesterday, I saw some just walking across the road, like up, and it's a busy street. Everybody's stopping for the Canada geese to cross the road with all their babies, but geese problems, man. And they hiss. Yeah, Jimmy A is right. They hiss. We've really went on a tangent here now.
What about imbalances here on this busy morning here in the S&P Index Futures? Now green again on the session by $1.50, 24.31. Dennis, any notable imbalances?
Yeah, there is actually. General Electric, 187,000 to sell. We talked about the dogs barking. GE has been a dog this quarter. Had a good day yesterday. It looks like it's getting some follow-through. 2-day rule working for General Electric here once again. AT&T, 102,000 to buy. That fits the description of the kind of stock that might rally on a day where rates are potentially not going higher because they trade more like bonds. Although the opposite direction, Verizon is 77,000 shares sell and bound, so that's interesting. Pair traders take note with AT&T 102,000 to buy, Verizon 77,000 to sell. Procter Gamble 59,000 to buy. Again, that fits the description that we're talking about, that the defensive stocks might actually catch a bid on a day like this. Ford, not following through from yesterday, 174,000 shares to sell in Ford. So we got some big institution looking to take some profits after yesterday's big run up in F.
And has Deutsche Bank came out and reiterated that General Electric is going to be cutting their dividend?
Don't they do that every day?
Yeah, they did that a couple times.
It'll go up. If it goes up again today, Deutsche Bank be out over the weekend. Hey, remember we said sell rating, and hey, remember we said they might cut their dividend. We're just in the background here, just letting you know.
Didn't quite get to that whole number at 27. Get to 27.10. A big institutional orders probably at that level. Now trying to rally back up here. Let's see. You got a double top here, but it's holding up. It's still up 8 cents. Let's see if we can clear the high from yesterday, 27.88. And I also see another high in that area from 5 days ago at 27.90. So see if you can get through 28 in General Electric. Is there any ratings or any other stocks that we missed that we wanted to cover?
Deere got the upgrade from JP Morgan. We briefly touched on that. Obviously, follow through upgrade from the move up yesterday in Deere after that merger. Fastenal. This one's interesting. Fastenal getting upgraded at Longbow. I'm interested in this one too. It's the nuts and bolts of your market here. Obviously, Fastenal makes everything that you fasten, so I call them the nuts and bolts. It's been hit pretty hard. It's got a 2.94% dividend. I've got this written on my investment, to put in my invest portfolio under 40. I don't know if we're going to quite get there though, but it kind of fits my description of a value stock. I like getting paid to wait here as well. It's starting to look interesting here though. Above 44, it starts to break out. So upgraded here today might put it above 44. It's an interesting setup. I'd love to get it under 40 in my invest portfolio. Not sure if I'm going to get it.
All right, Spencer, you want to preview the show for Monday, even though you'll be taking the day off?
Yep, Monday I will not be here, so please don't burn the place down. But I'm sure Chris can handle you. He has before, so yeah, I'll be out Monday. But as far as next week's shows goes, got a good slate of guests for you. Peter Brandt, prop trader. Jack Kramer, he runs the popular newsletter, or co-runs it, Market Snacks. Anne-Marie Ben will join us. Miss Schneider will join us. That's just a few of the guests on the docket for next week. Don't forget, if you can't listen to the show live, you can catch our podcast. We're on iTunes, SoundCloud, and Stitcher. Just subscribe any of those places to get those podcasts delivered to you. You can also subscribe to our YouTube channel, Benzinga TV, to get the show on YouTube live every day. That's where it's broadcasted. If you can't watch it or don't want to watch it, on the premarket.benzinga.com website. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. I think that's all I had to say. So Joel mentioned, actually teased it earlier, that we're going to be starting soon. We'll have some video components to the show. You'll be able to see Joel, Dennis, and myself, our pretty mugs during the show. So look forward to that in the next couple of weeks. And that's really it. So have a good rest of your day, everyone. Good luck out there. Have a good weekend. And we'll see you folks on Monday for our June 5th show. Have a good day.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.